Okay, thank you. Hello everybody and welcome to this live trading session on FX Street. My name is Pedro Mejias and I'm with the Nailing FX sessions with my system, the order flow. Before we begin, please, let's read the disclaimer. The following video clips demonstration are for educational and instructional purpose only. Tradewithufos provides these videos purely for the purpose of demonstrating the method of using the product. Users understand that all the content used in this video is purely for demonstration purposes only, and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained to the demonstration do not indicate in any way the results you may receive on using our products. This session is brought to you by Tradewithufos with the Trade with UFO indicator, and also by Skydesk Trading in the Cloud, Forex virtual machine hosting. So for you that are familiar already with the UFOs, let me just show you quick here what I'm talking about. The UFO is an indicator that shows you the selling and the buying zones in any chart. Okay, in this case we're looking at the euro 5-minute chart, and it shows us where the buyers might be. Okay, in this case it's showing us between these two green lines, and before you enter any position you should know in which direction you should be trading, if you're going long or short. Once you decide the direction that you're going to trade, then you can use this very powerful indicator to place your entries, your stop loss, okay, below the area. Okay, and you need, of course, you should confirm with any other thing like volume, like whatever other technique you make mix using this indicator. You can see here on the top the selling area. In this case, let's suppose we are going on a long trade here. So if we enter about this area, just like when this you can see this candle hit the green area, that will be a good entry, and we're already in profit here on this movement. So you might just get out depending on what you choose to be your target and why. And on the top, we can see this red area here. It's just showing us what is supposed to be the maximum area that this price will reach after before going back down again. Okay, that is what it's telling us. But you can just take the entries. Sometimes most of the times are very good, and just exit a few ticks after you have made the entry. The stop loss is always below these areas. Okay, it's something you can do. Also verify with volume, with other tools you might use to get a, let's say, a confirmation on this type of trade. Okay, all right. So you have any question, anything about this trade with UFO? Remember, you can also use the chat, and you have my email here, pedro@tradewithufos.com, and here's my link if you want to get access to the indicator. Okay, our other sponsor today is Skydesk, which is a Forex dedicated BPS, where you can host your EAs. If you are into the algorithm trading, you can easily host any EA here by a very, very good price. You can see just $9.99 for a month, and you have a 10-day no question asked money back guarantee. And the best thing is that you don't have to download or install anything. Everything is web-based, so you have the NT4 right on the web. You don't need to install it or anything. Just connect your broker, and that's it. You will have your EA running immediately. Let me just show you what I'm talking about here. Let me just show you here, for example. Here you can see how the NT4 is right on the web browser. Okay, it's a web browser. I didn't install or download anything. It's just right there, and it works like that. Okay, it's very easy to use. I recommend it 100%. Price is amazing as well. And you can also, if you are a web EA developer or into this type of business, you can use it as a white label as well. You can see the white label program they have here. Okay. All right. So let's jump to the chart now. Let's go back to our euro chart. If you have been with me before, you will have seen my chart, another type of chart. Let me just show you the basic chart just to begin explaining. Would be easier for you. If you have not seen any of my sessions, let me open an euro chart. Okay, this is a clean, pretty much clean euro chart. Let me just switch to tick charts, which is what I mostly use for trading. Let's wait a minute until it loads. All right, here we go. As you can see here, it's pretty much what we saw on the TradingView app using the UFO. Let me just bring it here so you can see. It's the same asset. It's the euro. It will have the same movement. Remember the UFO shows you where the buyers and sellings are, right? When we're using this order flow software, we can also see where the buyers and sellings are, because you can see here this long green line, right? These two long green lines. Let me just highlight it for you so you can see it better. Okay, we have this area right here where these green lines are bigger, and they are bigger because this is exactly how many lots are here pending to be filled in the buy orders. Okay, this is real-time information. Okay, you can see. Let me just put it bigger in case you don't see it. Right here on the right side, you can see exactly the amount of lots that are pending to be filled, right, in the buying side. The same for the selling side. Okay, so we have exactly, you can see here, exactly where the sellers are and where the buyers are. Okay, so this is pretty much, but exactly, I mean, it's real-time information, is the real thing. It's information from the market, where the buyers and where the sellers are, so you can act accordingly to this information. Okay, but this is just one part of the equation here. Okay, what we're talking about here is quantitative trading. So we use data. We don't use any figure, any Fibonacci numbers, any, I don't know, butterfly on the screen. We use data, and this data is available for everybody, okay, who has access to the market. But if you are only using an application, I don't know, like an NT4 or NT5 or TradingView, you will only get this. I mean, only get the bars. That's all you see. Okay, that's all you see, the bars. That's all you're gonna get using any other platform or system. But when we're using quantitative trading, we get all the data because that's what we work with. Okay, and besides that, we also get the bars. But these bars are not like the regular bar you will see an NT4 and NT5. But let me just continue a little bit explaining quickly what we have in the chart. I know some of you might have seen me before and they might have an idea of what I'm talking about. If you have any question, please use the chat. We have a chat here. Or you can always send me an email if you're watching the recording at pedro@tradicti.com, and I will just reply to you as soon as I can. All right. So in this chart, so far we have seen the bars that we can get in any platform. All right. That's pretty much useless. We have on the right side, we can see the liquidity, which is the pending orders in the market. So we know exactly where are the buyers waiting to be filled, right? We know that here are 196 lots of the euro pending to be filled. And we know that up here are 98, we have 266 lots at this price. So we have real data that we can use, okay? And you have to understand the market mechanics to use these tools, right? You can just not pretend that because you see 164 lot here, the price is going to go up. No, this is not that. It's just part of it. Okay, it's something that is there. It's important because without liquidity, there is no movement. Okay, but you also have on the this is a basic, very basic chart here on the on the quantitative trading system. And on the left side, you can see the volume, okay, which is very, very important. And there is a huge difference using the horizontal volume versus the vertical volume. Let me just show you, for example, vertical volume we have here below. Okay, we can see, oh, there's a lot of volume in this candle at this time and at this date, but that's all, right? We don't know which price was this, what was a buyer or seller. We don't know because we only see a bar higher than the others. So there's a lot of volume at this time. That's all it says. It's a lot of volume at this time. It doesn't say anything at all. So with the horizontal volume, we can see at which price, okay? For example, here you can see this bar is longer. Sorry, this is the bid and ask. Let me just switch to volume. You can see the volume here is bigger. 4,976 lots were traded at this price, exactly at this price, okay? And now we want to know, were the buyers, were the sellers? I mean, who was in charge? Who was being more aggressive? So we change to bid and ask, and we can see the exact amount of buyers and sellers in that price. All right, at that price during the session. Okay, you have to switch to the current day, for example, here. So we can see exactly at this price during this day there were 107, 1,708 sellers and 1,580 buyers. Okay, that's data, that's precision. Okay, that's what you need because the professional traders will be looking at this information while will be looking at just a simple candlestick, okay? And you will be always in disadvantage if you only see a candlestick and nothing else. So here we know where are the buyers, where are the sellers, right? Who is in charge? What's the volume? What's the biggest volume of the day? Where are the pending orders? Here on the right side, we can see where are the pending orders. We also can see the candles. I mean, we have everything, but we can have more. Let's say I want to know what exactly happened in this candle. Why is it red? I mean, were there more, the sellers were more aggressive here? The buyers were trapped? What happened here? I just need to change this into cluster and see exactly inside the candles to see exactly what happened. And I have a lot of options here. For example, I can see the bid and ask imbalance, which is what I mostly use in this case. So I can see exactly in this candle, this red candle, how many buying happened, okay, and exactly at which price, at what price. The same I can see the buyers on the right side, And I can see when it's red like this, it means that there's a big difference between diagonally from the buyers and the sellers. Okay, so it's called an imbalance. It's an imbalance in that actually makes the price move in one direction or another. Okay, and if we go back, we can see the whole history of what happened exactly during the day. We can spot trap traders. We can spot when the stop loss are being hit. We can spot everything because we can see inside exactly what's happening in the candles. You can combine these to any strategy you may have, and you can use all this type of tool, volume. You can see the difference, the delta, for example, here, the difference in trades between the buyers and sellers. You can see the volume. Okay, you can see here in the charts the volume. We watch the biggest volume inside a candle, for example. If you like to look at candles, I mean, there's a lot of stuff that you can use here. You can be forever here looking at data, and but you will think, oh, this is too complicated, and it is. It's not easy, but that's how professional traders trade with data. They don't you make a wait for a unicorn to form into the chart, into the candlestick, so they trade. No, they just look at this type of information, and that's why you are always in disadvantage if you're only looking at a simple candlestick. Okay, you need to see the volume. You need to see the liquidity, where the money is. You need to see um, what happened. It was what is happening as well. Let me just show you, for example, the depth of the market. Um, Here is the depth of the market. You can see here. And in this, here we can see a lot of information. We can see exactly everything that is we have in the chart, but here in a different way, in a different form. You can see the price is right in the middle. Okay, you can see this red column is the pending orders, the buy pending or the selling pending orders. Okay, here on the blue column you can see the buy pending orders in the market. So it's pretty much the same as we have here on the chart on the right side, but it's here. Okay, so it's depending on what you're doing, the type of trading. One might be easier to read than other. Okay, I'm comfortable with both of them. It's very nice to have it in the chart as well. And in here you can see, you can put, for example, filters to highlight when you think there is a lot of pending orders at a given price. Okay, we can see the volume here on the right, this right column in gray color. You can see the volume was being traded during the session. Okay, you can see, for example, here we're right now at the point of control, which is this price, 22,900, because this is the most traded price during the day. Okay, we can also see the market orders, which is actually what move the price. When the market order is executed and it takes all the pending order in one side or the other, it will move the price up or down. Okay, so these market orders that I'm cleaning right now, so you can see how they are created. When somebody takes this liquidity here, if they take it all, it will move the price up and up and up and up if they continue to buy this selling order. Okay, if they sell to these buyers right here who are pending, remember the pending order is somebody who is not in a rush. They are just waiting for the price or for the buyer to get where they are. Okay, they are not um, aggressive. They are just waiting there. But the market orders that we can see here executing in real time, that are taking this pending order, are the ones that move the market. But they require, of course, to be a pending order so they can take that order, right? Because if nobody's selling, the price won't move. or nobody's buying, the price won't move anyway. So what we see here is how the market orders are taking this liquidity here and moving the price down. In this case, you can see, and when it fills the selling pending orders, it will move the price up. Okay, and this is basic market mechanics. And as you have here on the top, the total amount of lots that are pending to be filled. You can see on the buying side, there are 7,100. On the selling side is 5,294. So you can have an idea, or actually not an idea, the real thing, how much selling orders are pending, how many um, buying orders are pending. Okay, so you have the exact amount, and you can use it in your strategy, whatever it is, and use it in your favor. Okay, the same way you can see here on the chart. All right, I don't know if you have any question, please use the chat. If you're watching the recording, just send me an email at pedro@predictive.com. I will be very happy to answer you. Okay, I don't know if you have any question right now. I'm gonna move this to a side. Right, that's the depth of the market. And we're here back to the chart. We can see the candles again. All right, and this is a basic, very basic layout. We're only showing you volume, liquidity, and the candlesticks. Okay, I use the candlestick just to so you can be more familiar with what I'm talking about here. But I can add many more things to this chart. I can add to show me the point of control. Just put it here. And you can see here, this is the point of control. Let me just highlight it for you. I'm going to explain a little bit about this. Okay, this is the point of control. You can see here, and exactly at this price, you can see the largest volume during the day is where the most traded happen. Okay, where the traders decided to buy or sell. Okay, at this price. So it's like the the middle on the volume session. You also have the value area high and the value area low, which means that between these two prices here, it happens 85 to 90% of the trade during the day. So everything outside these lines are outside this volume, this dense volume area, the 90, 80% of the trades. Sometimes when price goes beyond any of these points, it moves very quickly, very high in any direction, can be up or down, because it doesn't have any volume to hold it. Okay, it doesn't have many pending orders, doesn't have anything to hold the price, and the price tends to move very quickly, and also it's very hard to predict where it might go. Right, so I always recommend you want to trade using volume. Always try to initiate your trade inside the value areas. Okay, it doesn't matter if you are in the trade and you keep it open and it goes outside the value area. It's good because it's going to be a very long run. All right, so all right, this is very nice. We have information. We know all the pending order. We know the volume. We know what happened inside every candle, right? But how do we trade this? That's the difficult part, right? Well, there are many different techniques how to. The ones I prefer is the trade the imbalances. Okay, remember that I explained to you the imbalance. Let me just borrow a chart. This is you have a little bit more stuff. The same thing you saw on the other one. Okay, you can see on the right side the liquidity, pending orders. On the right side the volume, just a different color. The candlesticks, everything's the same. The only thing you will see this Y line here, this blue lines is the same as this Y. This is an average, okay? It's not a moving average, it's the VWAP, it's the volume average, okay? It's based on volume. And it shows you a reference price during the session that is used a lot for institutional traders, what they call a deferred price. Okay, the fair price during the day. And these blue lines are the deviation of this volume line. So what most algorithm traders in the market, I'm talking about advanced algorithm traders, use these volumes deviations to trade. You will find many times that when the price will be bouncing from these two lines, mostly are because algorithm traders are being triggered to trade between this area. Okay, this is a very nice thing to have in the chart because it's a reference. I use for myself, for example, I use this reference once I know my bias, if I'm going to buy or sell, I would use this reference to enter and exit my trades because I know that algorithm traders will use it as well for the same reason, to enter and exit. So I mostly trade between this area. Okay, remember also between the value area high and area low, and between these deviation lines for the big VWAP. Yeah, you can see in this case right now, it's pretty much, let me just highlight it. This area is pretty much inside the value area low, value area high, and inside the deviation. Okay, so I will be looking for a trade right inside this area. Okay, and I will also be checking the imbalances. Okay, I have you can see. Let me just remove this highlight here. You can see this green and this red. Let me just highlight it for you. Okay, let me just put it here. You can see this green and this red line in the chart. It's because here in this price there was a big imbalance. Okay, when it's red was a selling imbalance, and when it's green it's a buying imbalance. Okay, and let's take a look at this one, at the selling balance, but inside the candles. Okay, we can see that this selling balance here. Let me remove this so you can see it better. I put it a little bit bigger. You can see it what I exactly mean. Okay, when this imbalance initiated, it's because somebody sold 158 lots right here at this price. Okay, it's a huge trade, right? It's a lot of volume. It's a huge trade here. And at this price, you can see that 2,610 lots has been traded. And you can see the difference between the buyers and the sellers in each side. Okay, and in this case we see this huge sell, and we can see how this big sell has been influencing the market. Right? Let me just put a little bit smaller so you can see exactly what I mean. Okay, you can see the imbalance here. Let me just highlight it again for you. Right? So from this price, you can see how all the trades that happened after this has been trying to push the price lower. You can see this buyer here is a big buyer, but he didn't manage to move the price higher. The price always was going under. And you can see now how it keeps pushing it down, the price. Okay, so when we see this big sell here, and it's inside our let's say our trading area and in our trading bias, we can use this as an entry. Okay, so once the price just reach here, we can enter with a sell. Okay, or we can just wait for for it to go lower and enter, and you can see how the price just will slide down. Right, you can exit just before hitting the next deviation. You can exit here just to make sure, or you can exit nearby the next one. Okay, you can see how it actually reached the other one. Okay, this was already outside the value area, so you have to be careful because well, if you are in profit, of course, nothing to worry about because it will move very fast in your direction, the desired direction in this case, because we were selling. But once it gets to this deviation, I will just close it because remember that algorithm traders and traders at stop losses and everything that we can find here will be playing then to move the price in the opposite direction, just like what happened right here. Okay, and you can see again just in real time this 155 huge imbalance on the buying side. But what happened? It didn't move the price up. So this means that these traders that are right here are losing money. All right, and they might be in panic right now, and they in any moment if the price continues to slide down, they will close their trade. And what will happen? Well, the price will continue to slide down. Right? That's what that happened when stop loss are hit, when people enter in panic. You know, it will fuel this movement on the downside. Okay, if they see that they are losing the trades. Okay, now you can see now how the price is reaching back in this area. Is the interest of the market, the one who's manipulating the market right now, is to move the price up. It will make you think that the price, are continuing to go down, so he can refuel on the low side and then let the price lie on his desired direction. All right. So you can see all this by looking at data. Okay, it's a little bit confusing if you just look at the numbers right now because the first time you might be seeing this. But in time, you will start to understand and start looking at this. It will no longer look like the matrix stuff, but you will start seeing things. You will start seeing stop loss being hit. You will start seeing buyers being trapped. For example, here, they're always on the top when they buy. Then they're entering panic. Their stop loss are get hit. Everything that is happening in the market, you can just see it here by looking at these numbers. Okay. And additional to that, on the bottom of the chart, you have exactly a resume of what happened. How many buyers, how many sellers, the difference between the two, the time. You can add the volume. You can add many stuff here on this lower side. And also I have these little lines here. They tell me who's being aggressive at a given time. Okay, give me how much um, effort they're putting to put the price down or up, and if they're failing or not. I mean, there are a lot of information here that you can see only by looking at the data. Okay, but remember, this work is all like it's a puzzle. So you need the liquidity, you need the bid and ask information, the volume, okay, what everybody thinks is a fair price, the imbalances. You can get all this information and put it all together and build a very simple strategy, just like the one I just told you, and start trading. And let me tell you, this is something that it doesn't matter how much people trade like this, because the markets have always worked like this. Okay, always. Now you can see this 129. Remember that somebody bought here 155? Well, maybe this is the stop loss just being hit. Okay, they got out of the market because they probably realized that, no, this is not going any higher, so I'm getting out. And remember what I told you about the market mechanics? right here, when somebody take all the liquidity, in this case, it will push the price down, okay? Because this guy who bought here, he need to sell to get out of the market, but he will sell either on a pending order, he can put a stop loss, or just sell by a market order. And when a market order is executed, it will consume the liquidity and will move the price in one direction or the other. Okay, basic market mechanic. I don't know if you have any question. Please use the chat. If you have any doubt, any question, let me know. Everything's fine. Remember that if you are watching the recording, you can email me anytime at pedro@predicted.com. You can see the FX Street live show schedule here on this link. I will be on every one Tuesday. Also on YouTube, you can find me on the tradewithufos.com/nailing FX, or you can just visit Tradewithufo and see the schedule there. I will be every Tuesday as well. Okay, except when I'm here on FX Street. So it's one Tuesday for YouTube and one Tuesday for FX Street. You want to continue learning with my technique. Okay. If you want to have access to this platform, this is a question I'm getting right now from Mauro. Thank you, Mauro. Just send me an email. I will send you the link. Okay. So you can download the platform. And what I'm using, as you're asking me about broker, it doesn't matter, the broker. What I'm using here is Rhythmic as my fee provider. Okay, Rhythmic in this case is the what I use to get all the data from the market. So that's the most important thing. The broker, I have a broker connected here, but you can just use this as as an analysis tool to find the opportunities on the market every day. And there are some brokers that works directly with this platform. I have one is called AMP. You can use that broker as well. But in general, you can just use this for for looking for the price you are going to enter and exit, and just use it as an analysis tool. And it will work good with every asset. You can trade everything here, even Bitcoin and oil, whatever. It works excellent for everything. All I would recommend to you is to, if you want to trade like this, focus in one asset. Okay, get familiar with it. For example, I only trade the euro and I also trade the oil. Not so much the oil now, I'm trading more the euro, because I can get familiar with what the volumes are, right, during the day or during my own session time. What's the liquidity, the pending order? Because if I'm not familiar with this, I won't know that this is big and this is small. I won't know that, right? It might be just normal. I won't know if I'm not familiar with it. And if I trade, I don't know, 2, 3, or 5 different assets, it will be very hard for me to get familiar with all of them. Okay, and I will be trading like all day just to to use different assets. So I focus in one asset, get familiar with the liquidity available during that time that you are trading, right? Let's say you trade 2 hours a day. Well, always trade on the same time every day. You trade from 9 to 11, always trade from 9 to 11, because you will get familiar with what happened every day in that time. because at different times, there are different markets open, right? The European, the Americans, the Asia, they are different and they work different, each of them. And when they got together, they got together, it's a different movement as well. So you have a specific time to trade, it's good. You can have 2 or 3 hours during the day, 4 hours, whatever you want. Okay, but don't overtrade. Just focus on a narrow period of time. Okay, during the day, every day if you want, and get familiar with it. All right, get to know your asset. Get to know how it moves, how the mechanics works in that market, right? What influence the price. Once you get familiar with it, you will be able to trade it professionally, right? You will know the volume that is happening every day. You will know the liquidity that is available every day in that market. Otherwise, you will be just blind. You will know exactly what's going on. That's the only way you can actually, be successful in this, because this is very hard. I'm not gonna lie to you. This is very hard. It's one of the hardest things you can do for a living, and that's why I recommend you to focus on one thing and use the data. Right? You need data. You need information. You need to have an edge over the other traders. Many traders don't use this because they might think, oh, this is too hard. I want something easy. I want to draw a butterfly on my candlestick and trade it. All right, let them do that. But you get the data. You will know where they are with their butterfly, and you will take their money, because that's what this is about. All right. See a question here. The lot on the left side represent all the world or all the broker. This is the whole market, the futures market. Okay, this is the whole market. There's not one broker. Yeah, it's the liquidity, and it represents the whole market. In this case, the futures market that I'm trading, the euro right now. Okay, you're welcome. All right, guys. So I think time's up for today. I hope you enjoyed it, and remember, if you're watching the recording, you want to have access to the UFO or the trading software, the order flow software, just send me an email, okay, at pedro@tradewithufos.com. I will be very happy to read you guys, and I hope to see you next time. Next Tuesday I will be on YouTube, and the upcoming Tuesday I will be back here in FX Street. Okay, guys, hope you enjoyed the session today, and I also hope to see you next time. Thank you all for being here. Well, that's it. See you next time. Thank you, guys. Bye-bye.